Hello and welcome to our software tutorial series. This tutorial will continue to walk you through how to fill out the main information sheet in the software by completing the taxpayer's state information. In this tutorial, you will learn how to determine the number of states that can be prepared in the software on one return, enter resident, non-resident, part-year resident states in the software, enter the appropriate data in the resident, non-resident worksheets, and enter state information on Forms W-2, W-2G, and 1099-R. A federal return can have as many as 9 state returns attached in any combination. For example, you could have one full-year resident state, one part-year state, and one non-resident state, or any combination. When you enter state abbreviations on the main information sheet, the state forms will load in the forms list. If you do not have the state software installed, the software will prompt you to download or purchase it using pay per return. For detailed instructions on downloading state software, refer to the software's customer support website. Be sure to enter state abbreviations and amounts on all forms, such as Forms W-2, W-2G, 1099-R, and income statements. This allows the program to carry information correctly to the state returns. Select State Information in the State Information section on the main information sheet. In this section, you can designate No State Return, Full-Year Resident States, Different Full-Year Resident States for the taxpayer and the spouse, Part-Year States, and Non-Resident States. If you have no state return to prepare, select the If you are not preparing a state return checkbox. For any taxpayer with one resident state, enter the state abbreviation in the full year resident state field. If the taxpayer is married filing jointly, and the taxpayer and spouse each have 2 resident state returns, you can enter both. Enter the taxpayer's state in the first box and the spouse's state in the second box. Do not enter the same state abbreviation in both boxes. For a couple to qualify for separate full year state returns, both of the following conditions must apply. First, the taxpayer must be considered a full-year resident of one state, and the spouse a full-year resident of a different state. Second, the states must allow married taxpayers to file separate state returns when they file a joint federal return. Some of these states are Alabama, Arkansas, Connecticut, Delaware, the District of Columbia, Georgia, Illinois, Iowa, Kentucky, Massachusetts, Maryland, Nebraska, Pennsylvania, Tennessee, and Virginia. The taxpayers in this example are married and are filing a joint return. The taxpayer lives in Kentucky and the spouse in Alabama. You would enter KY in the first full-year resident box for the taxpayer and then AL in the second full-year resident box for the spouse. When the taxpayer and spouse are filing separate state returns, you should designate ownership of income and deductions to the taxpayer, the spouse, or both of them. On many forms, there is a box labeled TSJ to designate ownership. In this box, select T for the taxpayer, S for the spouse, or J for joint. This helps in separating income for state return purposes. After completing the federal return, open the resident and non-resident allocation worksheet. Enter any additional income adjustments. Amounts carry from this worksheet to state forms. On each state's primary form, indicate whether the return is for the taxpayer or the spouse. Sometimes the taxpayer lives in and earns income in 2 states. The taxpayer must complete tax returns for the part-year states. The software allows for 2 part-year states. In our second example, the taxpayer lived in Georgia for 6 months, and he then lived in Alabama for 6 months. In this situation, you would enter GA in the first part-year box, and then you would enter AL in the second part-year box. When you designate a part-year state, the software automatically loads the part-year resident worksheet into the return. This worksheet is used to separate income between the part-year resident states. After completing the federal return, review the worksheet and make any adjustments needed between states or between the taxpayer and spouse. The adjusted information carries from the worksheet to the state returns. Sometimes a taxpayer lives in one state and earns income in another. The taxpayer should complete tax returns for both states. The software allows for the preparation of up to 5 non-resident states at a time. For example, in this scenario, the taxpayer lived in Oregon but worked in California. Enter OR in the full year resident box and then enter CA in the non-resident box. When you designate a non-resident state, the software loads the resident and non-resident worksheet. This worksheet is used to separate income between resident and non-resident states. If there are more than 2 non-resident states, an additional worksheet loads to handle any other non-resident states. After completing the federal return, review the worksheet and make any necessary adjustments between resident and non-resident states or between the taxpayer and the spouse. The adjusted information carries from the worksheet to the state returns. You should now be able to determine the number of states, enter resident, non-resident, and part-year resident states, enter data in the resident, non-resident worksheet, and enter state information on forms. Thank you for viewing this tutorial.